In the past several weeks, China has brokered Saudi Arabian peace talks with Yemen and Iran, reaffirmed its ties with Russia, hosted the French president of Iran for discussions, and encircled Taiwan in a massive 3-day military exercise. While these actions shouldn't be dismissed, the media were quick to talk about how this signaled the end of the dollar as a global reserve currency and ended up sparking a de-dollarization frenzy. While it might make more exciting content, the idea that the dollar will be replaced by the Chinese yuan or any equivalent commodity-backed BRICS currency anytime soon is ambitious to say the least. It's important to remember that the yuan has still circulated less than the Swiss franc globally, despite the franc being issued by a country with just 8 million people. Furthermore, just until a week ago, the most used currency in Russia was the dollar, more than a year after they invaded Ukraine and gained the title for the most sanctioned country on earth. To cut to the point, yes, de-dollarization is trending up, but it doesn't look like the dollar will get replaced anytime soon without something substantial happening, like a default, which is something looking increasingly likely. Despite China making daily headlines, the United States has also been busy. After all, the US isn't just going to sit back and let its empire get chipped away at. In recent weeks, the US has established several new military bases in the Philippines, made multiple high-profile visits to Taiwan, and even expanded trade ties in Africa. Despite all these moves, one specific policy change arguably has the most potential. Back in November of last year, the US quietly allowed 5 oil companies to resume operations in Venezuela on a small scale. These include Chevron, Halliburton, Schlumberger, Baker Hughes, and Weatherford. While this didn't get a lot of publicity at the time, the reason that this is such a big deal is that Venezuela has the most proven oil reserves of any country on earth. However, it's barely produced any since 2017 due to sanctions. Despite the sanctions, with elevated oil prices, China pushing more into the Middle East every day, and the dollar under more pressure than ever, there are many reasons why the US would want to reopen trade ties with a country like Venezuela. And furthermore, contingent on if the president of Venezuela, Maduro, doesn't commit any further human rights abuses, more sanctions on Venezuela could be lifted in the coming months. Over time, not only would this shift global oil production firmly into the Americas and reaffirm the dollar as a global reserve currency, but it would be a massive opportunity for the 5 companies permitted to produce and export oil out of the country. Chevron in particular has made the most progress in the nation, exporting over 100,000 barrels of oil a day in February alone. While this still only represents a fraction of the total oil production, which stands at about 1.7 million barrels a day, this number could increase substantially over time. Given the very speculative nature of the circumstances, we've identified 3 primary datasets that we'll be watching for activity from the 5 companies resuming operations. These include corporate jet flight activity to Venezuela by company executives, corporate lobbying activity by these companies that mention the words such as trade, sanctions, and Venezuela, and lastly, any stock purchases of these companies by politicians, specifically those who sit on energy or trade committees, because let's face it, if anyone knows about a new energy or trade policy regarding Venezuela, it'll be them.